Fibonacci runs the markets and is super important for traders to understand. Here is a breakdown of the two major Fibonacci drawing tools for solid gains in crypto trading. Alright, so Fibonacci, first we look at the retracement. It's an extremely easy indicator to use. All we do is we find the Fibonacci retracement, add it to your favorites. The Fibonacci retracement uses 2 points of clicking, right? The first thing to understand when using the Fibonacci retracement is that we need to understand an uptrend. We need to understand market structure, which is why this is actually a larger tutorial. But market structure is very simply higher highs and higher lows. That is an uptrend, right? We can see here is a low, here is a high, here is a higher low, here is a higher high, higher low, and then we just get higher highs, higher highs, higher highs with all of the higher lows. When that changes is right here. You see this high, we got a lower high. This is also very important. So OGs, I hope you're listening, because this is super important for the OG cumulative volume delta strategy that I'm going to teach to you in a few minutes. All right, so as we got a lower high, we saw what we call a break of market structure, and we got the beginning of a downtrend. Same thing here. As soon as we got the break of market structure, we flipped into an uptrend. Same thing here. Break of market structure flipped into a downtrend. The first thing to establish when using the Fibonacci retracement is a completed uptrend. So once we got the break of market structure, which is a lower high, do you see how we did not get a break of market structure here because we did not get a lower high? We got another higher high. So right here, we could say, okay, this is a completed trend. We can now draw in our Fibonacci retracement very simply. One click at the bottom, one click at the top, and make sure you drag it all the way out for future price action. I want you to clean up your Fibonacci retracements to only have a few levels. A lot of the time, your retracements will have a huge amount of levels, and that can get confusing. I want you to focus on the major levels, which are the most significant, which are, of course, the 236, the 382, the 5, the 618, the 786, and the 1. And I know this is confusing, but once you read the articles on Fibonacci retracement, you will understand this. And as we can see, these levels are not just significant. These are the levels of human emotion. These are the levels that traders enter at. These are the levels that bots enter at. This is everything. This is what the charts run on. And the most important level that we have is the 0.618 level. Even more importantly is the space between the 0.618 and the 0.786. This space here is known as your Fibonacci golden pocket. This is one of the most OG strategies that you can use. It is called the Fibonacci golden pocket strategy. Fibonacci golden pocket strategy tells us that the Fibonacci golden pocket is the place where price is most likely to reverse. So we can see that all of our levels were playing out literally to the dollar. Absolutely beautiful. Look at this. It is beautiful. 0.382, very important. 0.5, an extremely important level. And then we see 0.618 to the dollar. And we see our golden pocket. This is why it's called a pocket, because we often see trace come down into the pocket, right? Like a snooker pocket, and then boom. All right, so let me clean this up quickly. And basically the most important thing to understand is first, completed trend. Second, one click at the bottom, one click at the top of the trend. Then we identify golden pocket, and very often what you'll see on my charts, many of you know this from my previous streams, is I will take this golden pocket and I will draw in this kind of a box. And I will say, okay, I want to manage a long trade from that area. And I'm teaching you this now on previous market cycles, and we're going to take it to our current cycle. Because we can see that if you just drew this in already from this point, right, you could have identified this section, which was such a beautiful trade. Can you see what would have happened if you entered the long trade even at the start of that golden pocket and managed your stop loss? Have a look at that beautiful trade, which is right now sitting in a beautiful 251% profit. right? This is a guide for entire market cycles. There we go. All right. So everybody can see how the Fibonacci retracement allowed us to get, first of all, the 0.382, the 0.5, all of these beautiful little long trades, right? Look at this, 0.5 long, 0.382 long scalp. And then our most major level, the space between, I mean, look at that. Bullish divergence came in directly between the 0.618 and the 0.786. You cannot make this up. This is mathematics running our own human emotions, right? We like to think we have free will. Fibonacci tells us that we are predictable. How crazy is that? All right, so now what I'm going to do is a little bit of a tutorial on the Fibonacci extension, right? So first things first, we want to look at the retracements. Once you have entered your trade, so let's just do that very quickly again, from the bottom to the top, we pull it out. So we give ourselves lots of time for price action. Of course, this is market structure on the daily. So this trade took a long time to play out, but this is portfolio making information, right? At the break of market structure here, you could have sold some. At the break of market structure here, you could have bought some. Break of market structure here, sold some. Then at the Fibonacci golden pocket, you buy more and you go long. All right, now what's very important is once you are in this long trade, so first of all, like I said, you take your triangle and you draw it out at the liquidity, which is at the golden pocket between the 618 and the 786. Now that we can see the turnaround point, right? This is the Fibonacci golden pocket. We have the top, we have the bottom. We now have 3 points, right? Because we have the bottom, we have the top. We also have where we pivoted on the golden pocket. So very important. Now we're going to use the Fibonacci extension. We need 3 points. We need the bottom of a trend. We need the top of a trend. And then we need the golden pocket turnaround. Once you have these 3 points, right, you've gotten into this trade now. You're in a beautiful long and you're thinking, where do I take my profits? So before we had any of this price action, we had 3 important levels. We had the bottom of a trend, we had the top of a trend, and we had the Fibonacci pivot. Now we can go ahead and draw in our trend-based Fibonacci extension. This now uses 3 points, and this is to extrapolate future price action. And it's simple. We click from the bottom to the top, and then we pull it out to the bottom. And what you can see is, of course, we get once again to the dollar Fibonacci mathematics making so much sense, right? First take profit 0.236, smashed TP1. And I always say, make sure your take profits are just below the Fibonacci levels, because there are so many humans, bots, indicators, all kinds of algorithms that are taking profits at those levels. And quite often, all of the liquidity will be swept out of the market just before that level. And you don't want to be sitting here with your take profit at the one level, and then all of the bots come in and swing it out just before you get to your level, right? So put your take profits in just below these levels. And this is just good trading. This is just gradual profit taking. You might think, oh, if I took profits there, I would have missed out on some profits at the final take profit. But no, you need to take profits all along the way. What I do is at the first TP, I actually take my initial margin off the table. The margin which is in profit, I will then let ride. This is the best way that you can possibly manage your risk in this market. First, we take the Fibonacci retracement from bottom to top. We identify the golden pocket. Then we take our long at the golden pocket. Once we are in the long from the golden pocket, we then take our Fibonacci extension from the original bottom to the original top to our new pivot, right at the bottom of that pivot. And this will give us all of the levels for our take profits. And then all you do, I mean, you can see on my current Jasmine trade, I'll show you now, this is exactly what I've done. I'm still holding the Jasmine trade. All we do is we set a take profit just below the 0.236, just below the 0.382, right? Just below the 0.5. These are my personal preferences for significant levels. Of course, just below the 0.618. Of course, just below the 0.786. And then obvious, right here. And then obvious at the 1.618. Does everybody see that just below the 1.618 has been our major take profit? This is also super bullish that we still have a 2.618 final take profit level on this Fibonacci extension sitting up at 173,000. There are many traders who have not taken their full take profits on this long trade because they are leaving the last little bit in the trade all the way up to 173,000. All right, so I feel good because I feel like I've given the newbies something to work with today, and that's awesome. This is something that I do employ in my own trading. Most of you will know that, yeah, the Fibonacci golden pocket is something that we really look at for our longs and our shorts for retracements, and then it's also what we look at to actually set our take profits.